The US dollar. Now, the US dollar had drifted higher at the open today. We're drifting to the upside because we've seen escalation once again on both sides between US and Iran, US bombs, Qasem and Guruk. So the US military said it attacked Iranian radar and drone sites in the US of Guruk, in the city of Guruk and the island of Qasem over the weekend. Kuwait reports hostile missile and drone attacks as Iran's IRGC said it launched retaliatory strike on basic claims was used for a strike, an attack on Sirak Island. A lot of tit for tat, but it is further escalation. And markets are just remaining delusionally optimistic still because Trump's seeking edits to US and Iran deal, as reported by US media. So the optimism is preventing this from being total catastrophe, i.e., that the dollar breaks out higher on escalation because there's still that element of optimism. It's a case of potentially playing the range until we get a catalyst for a breakout. The catalyst would be, as I did in my June outlook, would be the case that the peace talks end, and then dollar obviously can break out to the upside because obviously the fighting will continue without any hope of a peace deal. The dollar's downside play would be that a peace deal is agreed and this fighting ends. Okay. What's possible? We're not likely to see that, I don't believe, today or anytime soon. It is possible that we're going to come down for the dollar anyway, just on this delusional optimism, right? Because the talks are still, negotiators are still at the table at the end of the day. We could come down here. So we had a fake out from this range. We could come down, equal lows, double bottom, and then push back within this range. It's a possibility. We've also got key data this week, right? Which the desk are positioned for. We have key labor market data from the United States, right? The non-farm payrolls, average hourly earnings, which is all, and in the unemployment rate is all very much important to see as to whether labor market is deflationary or inflationary, i.e., are we going to be expecting rate hikes sooner or rather than later? Because obviously, if this data is inflationary, right, i.e., bullish, good data, good labor market data, obviously that feeds into the inflation narrative, and that would be positive for the dollar's market start ramping up their rate hike pricing. So that's my take on dollar right now. Expected more choppy price action until we get a clear range breakout for the catalyst to drive that range break.